In the world of money, power doesn't always belong to governments or central banks. Sometimes it's hidden behind a simple card swipe. American Express, a company that began as a small freight delivery service in the 1800s, quietly built one of the most profitable financial empires on earth. But this story isn't just about a credit card. It's about how Amex turned trust, exclusivity, and consumer psychology into a trillion-dollar money machine. Before we begin, if you enjoy uncovering how financial giants shape the world you live in, make sure to subscribe and tell me in the comments, from which country are you watching and what time is it right now? It's always fascinating to see how money connects us all, no matter where we are. Let's go back to the beginning. In 1850, when Wells Fargo and the Pony Express dominated the American frontier, three businessmen, Henry Wells, William Fargo, and John Butterfield, decided to create a company built on reliability. Back then, moving goods and money across states was risky. Highway robbers, counterfeit notes, and corrupt middlemen made every transaction a gamble. But American Express promised safety and trust. Two things people valued even more than profit. That promise became its foundation. By the late 19th century, Amex began issuing money orders and travelers' checks, products that transformed it from a delivery service into a financial institution. In an age before global banks, these checks allowed travelers to carry value safely anywhere in the world. Imagine this. It's 1900, and you're crossing the Atlantic with a few slips of paper backed by American Express. No coins, no gold bars, just a signature. That was revolutionary. It built global trust in the Amex name long before credit cards even existed. Then came a turning point. After World War II, America's middle class exploded. Consumption became identity. People wanted not just to buy things, but to feel elite while doing it. That's where American Express saw its chance. In 1958, while Diners Club was testing early charge cards, Amex launched its own, but with a twist. It wasn't for everyone. The card was marketed to professionals, executives, and travelers, people who wanted status. By refusing to cater to the masses, American Express created scarcity, and scarcity created desire. The genius wasn't just in exclusivity, it was in the business model. Unlike banks, which profited from lending money and charging interest, Amex made money on every transaction. Every time someone swiped their card, a small cut went back to Amex. The more its members spent, the richer the company became. In other words, American Express didn't need to lend. It needed you to live, to travel, dine, and spend. It monetized lifestyle itself. But exclusivity came with a price. Amex demanded full payment every month. No debt, no installment plans. That might seem like a limitation, but it reinforced the brand's core message. This isn't about borrowing, it's about belonging. The Amex card wasn't a loan, it was a badge of trust. And that badge became one of the most powerful marketing tools in modern finance. By the 1980s, membership was the word. Not customers, members. The slogan, "Don T, leave home without it," turned a piece of plastic into a passport for prestige. But behind the prestige was data. Millions of records about where wealthy consumers traveled, ate, and spent. Amex wasn't just selling services, it was building a database of global consumer behavior decades before data analytics became a buzzword. That information allowed the company to design rewards, partnerships, and offers that perfectly matched its users' habits, all while strengthening loyalty. And then, like every great empire, American Express diversified. It entered travel planning, financial advising, and even insurance. But what made it unique was that it didn't act like a traditional bank. It wasn't bound by deposit requirements or lending limits. It was freer, more agile, and less regulated. And in finance, freedom is leverage. The more Amex operated outside the typical banking model, the more it could innovate and profit. But let's pause here and consider something deeper. The rise of American Express wasn't just about business, it was about psychology. It proved that people value trust, recognition, and belonging more than interest rates or credit limits. When you hand over an Amex card, you're signaling something, not wealth, but access. You're saying, I'm part of the club. That's what makes this company more than a payment processor. It's a masterclass in emotional economics. As globalization accelerated in the 1990s and 2000s, Amex became the financial passport of the global elite. Business travelers charged flights, hotels, and entertainment, all with a promise of security and perks. Behind each swipe was a mountain of data flowing into Amex's algorithms, mapping out spending trends that even governments couldn't track. In many ways, American Express knew more about the movement of money than central banks. This power came from scale, but also from control. Unlike Visa or MasterCard, which rely on partner banks, Amex controls the full transaction pipeline, issuing cards, managing accounts, and running its payment network. That vertical integration means every part of the process generates profit and insight. It's like owning the mine, the refinery, and the jewelry shop all at once. And in finance, that kind of control is rare. By the time digital payments started to dominate, American Express had already positioned itself as a trusted gatekeeper. Even as new fintech startups promised convenience, they couldn't replicate what Amex had built: decades of brand trust and a customer base that equated loyalty with identity. When Apple launched Apple Pay, Amex was one of the first to integrate. When Amazon began offering co-branded cards, Amex partnered in seconds. It understood that survival wasn't about resisting change. It was about embedding itself in every system of exchange. But every empire faces challenges. For Amex, it was competition. Visa and Mastercard opened their networks to millions of merchants at lower fees, while Amex's exclusivity meant fewer businesses accepted it. Consumers loved the perks, but merchants hated the cost. Over time, this forced Amex to evolve, offering more flexible cards, rewards programs, and partnerships. Yet, even with these adjustments, one thing never changed: Amex's ability to turn spending into power. In 2020, as the pandemic rewired global finance, American Express faced a dilemma. Travel and dining, its biggest revenue streams, collapsed overnight. But instead of panicking, it doubled down on brand. It pivoted rewards toward groceries, streaming, and online shopping, meeting members where they lived. This adaptability showed the world that Amex wasn't a relic of luxury spending. It was a machine that could survive any economic climate. And that's what makes American Express more than a financial institution. It's a lesson in resilience. It didn't chase trends, it shaped them. It didn't depend on government backing. It built its own network of trust. In a world where central banks print value out of thin air, American Express created value from relationships. The company today handles over $1 trillion in annual transactions. That's not debt, not speculation. It's real spending, real people, real trust. When you step back and look at that scale, you realize something profound. Amex has done what most governments can't. It created a parallel economy powered not by force, but by belief. And yet, beneath the surface, there's still an unspoken truth. By encouraging constant spending, Amex thrives on a system that rewards consumption over saving. It has mastered the art of turning desire into data, and data into dividends. In doing so, it reminds us that in modern capitalism, money doesn't flow toward need. It flows toward behavior. When we return in the next section, I'll explore how American Express turned its brand into a global instrument of influence, one that doesn't not just move money, but shapes how people think about it. Would you keep trusting a company that profits every time you spend? Or is it smarter to learn how they think before they think for you? By the time the 21st century began, American Express wasn't just a card company. It was a brand that defined how people viewed financial success. Every design choice, every slogan, every benefit was carefully crafted to send one message: spending is status. And that idea became its greatest weapon. Amex had built an empire not by forcing people to buy, but by making them want to. A simple black card, for example, could command instant respect. No bank would dare turn away someone holding a Centurion card. The ultra-exclusive Amex that required an invitation, a massive spending history, and a hefty annual fee. But here's the genius. The Centurion card wasn't about convenience. It was about perception. Amex understood that people don't buy credit. They buy identity. And identity, once monetized, can be endlessly sold. This mindset shaped how the company approached every market. In the United States, Amex leaned on prestige. In Asia, it positioned itself as a gateway to Western luxury. In Europe, it became a symbol of global connection. Each market got its own narrative, but the foundation remained trust and exclusivity. The result was a brand that could adapt anywhere without losing its essence. But behind the luxury image, a deeper transformation was underway. American Express had evolved from a financial service provider into a data powerhouse. Every transaction, every hotel booking, every airline ticket fed into a massive data infrastructure. This wasn't just about loyalty points or cashback offers. It was behavioral economics in action. Amex learned to predict what customers would want before they knew it themselves. Think of it like this. If you booked a flight to Paris, Amex would know which restaurants to recommend, which stores to promote, and when to tempt you with special offers. It was precision marketing long before the age of algorithms. And because its users were high-income spenders, that data was pure gold. In the digital economy, information is power, and Amex had more than almost anyone. This data-driven strategy created a loop of control. Merchants couldn't afford to lose Amex customers, so they paid higher fees. Those fees funded better rewards, which attracted more high-value users. More users meant better data, which reinforced the cycle. That is how American Express became one of the few companies that could charge merchants up to 3 times what Visa or Mastercard did and still be welcomed. Because when your customers are the most profitable ones, businesses don't argue about cost. Still, not everything was smooth. Regulators began questioning Amex's dominance in certain sectors. Lawsuits emerged over merchant restrictions and exclusive agreements. Critics argued that the company used its market position to manipulate prices and limit competition. But Amex's response was consistent. It didn't compete on price, it competed on trust. And for millions of consumers, that was enough. At the same time, the global economy was shifting. Cryptocurrencies promised decentralized freedom. Digital wallets offered instant transfers. Fintech startups like PayPal and Square targeted younger generations who didn't care about prestige. Many analysts predicted that American Express would struggle to stay relevant, but they underestimated the company's adaptability. Rather than fighting disruption, Amex integrated with it. It partnered with Apple Pay, Google Wallet, and PayPal, embedding its network into every new financial ecosystem. The logic was simple. No matter how money moves, Amex must be part of the flow. Whether it's a metal card, a phone tap, or a digital token, American Express makes sure it earns a slice of the transaction. And that's where its true genius lies. Amex doesn't need to dominate technology. It needs to remain indispensable. Its power isn't in infrastructure, it's in perception. When people associate your brand with reliability, they bring you wherever they go. Even as younger consumers seek convenience over luxury, American Express continues to frame itself as a lifestyle companion. Not a lender, but an enabler. One of the most interesting things about Amex's evolution is how it blends emotion and economics. Take the concept of membership. It's subtle but powerful. You're not a customer, you're part of something. That single word shifts behavior. Customers question prices. Members defend them. Customers compare options. Members stay loyal. This linguistic strategy has helped Amex maintain some of the highest retention rates in the industry. It also mastered the art of storytelling. While banks promote low interest rates, Amex sells experiences. Travel lounges, concierge services, airport upgrades. These aren't financial products. They're symbols of control in an uncertain world. When people feel empowered, they spend more. And every swipe feeds the machine. But what's less visible is how American Express's influence reaches into government and corporate finance. Through partnerships and lobbying, Amex helps shape financial policy, payment regulations, and digital standards. It sits on advisory boards, sponsors economic research, and funds initiatives that align with its interests. Over time, it has blurred the line between public and private influence, much like central banks or rating agencies. Consider how American Express weathered crises. During the 2008 financial meltdown, while banks collapsed under bad loans, Amex survived by pivoting. It secured a temporary banking license to access federal support, repaid it quickly, and emerged stronger. That move revealed how deeply embedded it was in the financial system. A company once known for travelers' checks had become systemically important, too trusted to fail. Yet the moral question remains, what happens when a company profits most from a culture of endless spending? For every traveler enjoying airport lounges, there's another consumer chasing rewards while accumulating debt. Even though Amex doesn't rely on interest income, it still thrives in a world that normalizes consumption as success. And that culture is spreading globally. Today, American Express handles transactions worth over $1 trillion annually. Its network spans more than 130 countries. Every swipe contributes to a river of data and dollars that fuels the company's dominance. But this scale also reveals something unsettling. If a private company processes this much global spending, doesn't that make it an economic institution in its own right? In many ways, Amex is like a private central bank, issuing trust instead of currency. Let's take a step back and compare. Central banks create money by printing currency or expanding credit. American Express creates spending power by issuing status and trust. Both control behavior, shape markets, and influence economies. One does it through policy, the other through psychology. And in today's world, psychology often wins. When people believe that value comes from experience rather than savings, companies like Amex thrive. They've built a system where you feel richer the more you spend, not the more you save. It's a brilliant, self-sustaining illusion, and one that defines the modern economy. But what happens when this illusion collides with reality? What if inflation rises, savings vanish, and consumers pull back? That's where the test begins. American Express's power relies on confidence, not capital. If people stop seeing value in prestige, the machine slows. That's the silent risk behind every brand built on perception. As we move into the final section, we will explore what the future looks like for American Express and what its story tells us about the evolution of capitalism itself. Is this company the ultimate example of financial genius, or proof that modern money depends entirely on belief? By the time you reach the modern era, American Express is no longer just a financial company. It's a cultural institution. The logo carries weight. The name commands attention. In many countries, flashing an Amex card signals more than purchasing power. It signals trustworthiness, stability, and access to a network that never says no. This wasn't luck, it was design. And behind that design sits one of the most fascinating stories of financial strategy ever written. The secret behind American Express's trillion-dollar reach is how it controls both sides of the transaction. Most credit card companies are middlemen. They process payments between banks and merchants. But American Express operates a closed-loop network. It issues the cards, signs up the merchants, and manages the data. That means every dollar spent flows through its own ecosystem. No external banks, no outsourcing, full visibility, full control. This design gives Amex something far more valuable than interest income: information. The company knows what its members buy, when they buy, and how often. It can track shifts in consumer behavior faster than governments can record inflation. That insight lets Amex anticipate recessions, target promotions, and negotiate with partners from a position of strength. While other financial firms rely on lagging indicators, Amex lives in real time. And this real-time feedback loop feeds its next advantage: adaptability. When the COVID-19 pandemic hit, global travel collapsed, devastating airlines, hotels, and luxury brands. Many thought Amex would suffer the same fate. Instead, it pivoted. It launched new rewards for online shopping, home entertainment, and food delivery. Within months, spending patterns shifted again, and Amex was already there. It turned crisis into opportunity, proving that flexibility, not tradition, keeps giants alive. At the same time, the company quietly expanded its corporate card business. Every major firm, from tech giants to consulting agencies, needs a way to manage employee spending. Amex built entire systems to track, categorize, and analyze these expenses. For executives, that meant control. For Amex, it meant another stream of data. Today, many Fortune 500 companies rely on American Express not just for payments, but for operational visibility. And while this looks like progress, there's a deeper implication. When a private company becomes this intertwined with global commerce, it gains soft power, the ability to shape incentives without legislation. By tweaking rewards or merchant fees, Amex can nudge industries toward certain behaviors. It can encourage travel, luxury consumption, or business expansion. That's influence most governments would envy. Still, American Express isn't without challenges. Competition is fierce. Visa and Mastercard dominate raw transaction volume. Fintech startups push zero-fee models. Crypto promises independence from intermediaries. Yet, through all this noise, Amex keeps its niche intact. It doesn't aim for everyone, only the most valuable customers. The top 10% of spenders generate the bulk of its revenue, and those customers rarely switch. They aren't chasing discounts, they're chasing assurance. This focus has allowed Amex to maintain profitability even as the world digitizes. Its model doesn't rely on lending at risky margins. Instead, it earns from fees, partnerships, and membership programs. This shields it from credit crises that hurt traditional banks. In a world addicted to debt, Amex profits from spending, not borrowing. That subtle distinction explains why it has survived financial storms that wiped out others. But here's the philosophical question that hangs over its success. If the foundation of value becomes experience, what happens when experience loses meaning? A century ago, people associated wealth with land, gold, or savings. Today it's travel photos, luxury goods, and lifestyle perks, things that depreciate instantly. Amex didn't create this culture, but it perfected how to monetize it. By turning aspiration into an endless loop of consumption, it made itself indispensable. Every campaign, from "Don't leave home without it" to "Membership has its privileges," reinforces the same idea. You aren't buying a product, you're buying access. And access is addictive. It creates emotional dependence. People fear losing it more than they value keeping it. That psychological grip explains why millions pay annual fees just to hold the card. In many ways, American Express embodies the evolution of capitalism itself. The early industrial economy rewarded production. The modern one rewards perception. Amex doesn't manufacture goods. It manufactures belief in exclusivity, in experience, in identity. When enough people buy into that belief, the system sustains itself. But belief systems are fragile. Inflation, inequality, or digital disruption could change what consumers value. If younger generations reject status-driven spending, Amex faces an identity crisis. Its brand power depends on aspiration, and aspiration shifts with time. That's why the company invests heavily in cultural relevance, sponsoring events, influencers, and social causes. It must stay visible where prestige is redefined. And yet, you could argue that American Express has already won. Even if preferences shift, its network remains embedded in global commerce. Airlines, hotels, and luxury retailers depend on Amex customers for survival. Governments rely on its data for tourism and trade forecasts. Businesses trust its analytics to guide strategy. In this sense, American Express isn't just part of the financial system, it's infrastructure. So where does this leave us? The story of American Express is the story of how trust became monetized. It shows that in modern finance, the most valuable asset isn't gold, land, or credit, it's confidence. When people believe in your brand, They'll pay more, stay longer, and forgive mistakes. That's the invisible currency behind every trillion-dollar company. As the global economy faces uncertainty, from inflation to digital disruption, American Express remains a fascinating case study. It reminds us that money isn't just about numbers. It's about emotion, perception, and control. Every charge, every reward, every lounge access is a subtle transaction of trust. The question is whether that trust can survive a world that's losing faith in institutions. And when people question banks, currencies, and governments, will they still believe in brands? If they do, American Express will continue to thrive. If they don't, the illusion collapses. But one thing's certain. American Express changed how we think about money. It turned spending into identity, loyalty into leverage, and transactions into power. Whether that's genius or manipulation depends on where you stand. But its influence is undeniable. A company that began with mail orders now processes over $1 trillion a year, not because it forces anyone, but because people want to belong. And that, perhaps, is the final